All right, let's go. We are back. Keylock page, Keon Edwards page, guys. As you can see from the title of the video, I really want to have a conversation about insurance, and I want to specify the insurance industry as a whole. I know a lot of people watch my videos because they're looking to get into the insurance industry, or they may have some questions, or they may not understand certain significance of how this industry works. And I just really want to vent to some people because I remember when I was in a space to where I was just like, okay, insurance, this is boring. Is this something that I truly want to do? Is this something that I truly want to take advantage of? And I can say, like, as long as you're willing to learn, and you're willing to grow, and you're willing to change, and you're willing to understand that you have the leverage to help people at a level that most people can never even reach, you need to be in the insurance industry. And the reason why I say that is I'm just thinking about, everything that I've done over this last year, when it comes down to all of the policies that I've been able to write. And it's just like, wow, like most people, their first year, they would never have the ability to write over $50 million worth of coverage. And a lot of those policies, 90% of those policies, we lowered the death benefit by half. So if a person has a $250,000 policy, we really took it down an extra $250,000 because we were able to leverage the cash value in the policies. Now, I want to talk about, pretty much this whole cash value thing and the idea that a lot of people have about cash value and why they have that idea. I have no idea, right? I have no idea why people have that idea. But one thing I could definitely say is this. Insurance is not a this is right, this is wrong, do it this way type situation. When you're talking about leveraging one of the most powerful institutions in the world, you need to figure out how to leverage it for you in your own situation. How to leverage it for you, right? And some people, which all people, should be leveraging that death benefit part, okay? Everybody should be leveraging that death benefit part. I don't care who you are. I don't care if you have term. I don't care if you have whole life. You should be leveraging the death benefit. And the reason why you should be leveraging the death benefit is because it puts you in a situation to where I don't care nothing about no burial, right? Stop caring about the burial. You should care about the fact that in order for you to transfer wealth to your family, you need to be able to invest in so many different assets. So some people like to invest into real estate. Some people like to invest into businesses. Some people like to invest in a whole bunch of different things. But one thing that has never failed people was the insurance industry when it comes down to passing away and leveraging the inheritance. See, some people, especially in the black community, we like to call it life insurance or death insurance, and we just like to get $10,000 policies and $15,000 policies, which is cute, all right? And the reason why I say it's cute is because it's just going to do enough just to say goodbye. No. When you are in a situation where you want to pass on, not even just pass on wealth to your family, but you want to make a difference, like, you need to make sure you have this $100,000 policy, $250,000 policy, $500,000 policy, because there's so many situations to where, especially if you are a man of the household, you're in a space to where you're the head of the house. More than likely, you might be the breadwinner in the house. I mean, I don't know. If you're in a situation right now, statistically, you're gonna die before your wife. Okay, statistically, that's just how it is. You're gonna die before your wife. So if there's a high probability that you're gonna die before your wife, you want to be in a situation to where you know that these bills still got to get paid whether you're here or not. You know that if you're owning that home, that rent still have to get paid. That mortgage has to still get paid. That car note, right? So many different things have to get paid even though you're not here. So what happens is a lot of times people put so many burdens on their families and their wives and having to pay off that mortgage, pay off that home loan, pay off all these different things that it just doesn't make sense if you were properly in a situation where you were thinking about insurance. Number two, when it comes down to dealing with this life insurance stuff, It's you understanding the value of inheritance, okay? First, you get it on yourself, and then you figure out, how can I be in a situation where everybody in my family is worth something, okay? You want to be in a situation where, hey, listen, grandmama, granddad, auntie, uncles, cousins, family, somebody eventually is going to pass away. That's life, right? And when that money gets transitioned out, you want to be in a space to where, okay, you know, yes, this person passed away, but at least let us leverage those funds to invest into our family, to take our family to another level. What would $1 million towards your family do for your family? And we're not talking about bills. Bills is just little money. We're talking about being able to invest into stocks that are paying dividends quarterly, that are covering your annual bills. We're talking about being able to invest into a family business, a food business that can transition your whole entire family. We're talking about majority people right now in 2023 that are getting divorces. They're in a situation, they're talking about money. Every time I get on social media, these people are talking about money in relationships. And if this is the biggest problem, insurance could solve that problem. And I'm not going to say working hard cannot solve that problem, but some people just will never get the opportunity and never get the leverage. Most people that are multimillionaires, they work hard, but it's luck. Majority of the time, it's luck. It's being able to acquire certain knowledge and details because you was at the right place at the right time. And you don't have that opportunity every single time. You don't have that opportunity every single time. Something new. There's a new business. There's a new way to make $1 million every single day right now. Okay. But if you want to be in a situation where you can transition wealth without working so hard, some people, they don't want to work hard. Some people want to have that traditional job. Okay. But it's nothing wrong with having a traditional job. But imagine how you will work your job or work your business with $1 million in your bank account. Okay, well, we don't want it in your bank account, but you have $1 million liquid to your name. How would you work your business? Okay, how would you work your dreams? How would you work your goals? It's some people right now, you're 60, you're 70 years old. Okay, you're in a space to where you don't have that much energy to keep putting into somebody else's dream. You want to start dreaming for yourself. You want to start giving back to your community. You want to be able to give back to your church. So creating that inheritance is going to allow you to do that. Even if you're not financially literate, you still have the ability to give at a level that people will remember you. People will remember you, and people remember who you are. Number 3 is the cash value, okay? Now, a lot of people, let me tell y'all something. I have nothing against Primerica. I have nothing against WFG. I have nothing against nobody in this industry. I'm not biased to anything. I think Primerica, I think WFG, the movement, I think the movement of the insurance industry is beautiful. Okay, we're not selling, nobody's selling a fake product, right? I don't believe in telling people to get this and don't get that. What I believe in is educating people about whatever they're getting and making sure that they understand the loopholes and everything. There is always a risk to reward in every single thing. If anybody tells you there's no risk to reward in something, they're lying. There's a risk to reward in everything. And by you understanding the value of cash value, whether you want to grow it or not, whether you want to build cash value or not, you still need to understand what cash value is. So eventually at one point you have options. See, most people tell you that you don't have options. I want you to understand that you do have options. And the reason why I can say that, number one, boldly, is because I understand the power of both. I understand the power of term insurance, and I understand the power of traditional whole life insurance. And they're both very, very powerful vehicles, okay? And they're both will put you in a situation where you can transition wealth to your family, okay? Now, I don't know the historic reason behind the whole life or whatever, but I do understand that in 2023, the stocks are very low, right? The 401ks, people are not satisfied with their 401ks, okay? Because their companies are investing into just trash companies. Their companies are investing into things that are not going to last. When companies should be investing in tech companies and things like that. And we're in a situation to where banks are collapsing, a whole bunch of different stuff, right? So when you're talking about the cash value of a policy, I want you to change and transition your mind when you're talking about cash value. And in the beginning, it didn't make sense on why somebody would want, their money stored in a life insurance policy versus a bank. But it began to make a little bit, it began to make so much sense when you look at all of the different scenarios on why people utilize cash value, okay? So when you're talking about assets, and I'm still learning a little bit more about, different assets that you can invest in that will have that equity inside of it. When you're talking about these different assets, one of the assets are life insurance, okay? And a certain portion of your premium will go towards the death benefit. And another portion of your premium will go towards what we call that cash value. Now, sometimes that cash value is in a situation to where it can be leveraged to earn interest, usually about 3% in most whole life companies or mutual companies that I've seen, usually about 3%, okay? And then I've also seen companies be in a situation to where they're able to pay a little bit more in dividends, to where you could get a little bit more than that 3%, but you're also in a situation to where you could leverage maybe an index universal life policy or a whole life policy or a one-time lump sum dump type policy, okay? So let me go over the whole life policy real quick. That means that you're paying on a consistent basis, a certain percentage is going towards the cash value. Usually if the policy is structured correctly, you're able to access that cash value after the first year, okay? Or after the first 30 days. It just depends upon your company. Now, either one is not, no policy is structured to, oh, let me hurry up and get this money out, unless you're doing a whole life one-time lump sum dump. That will probably be the basis of everything, but you shouldn't be in a rush to get your money out. This should just be another vehicle to where you're storing your money, just like a 401k or IRA. It's in those vehicles to where you shouldn't be looking to touch this money no time soon. If it just so happens to where you want to leverage it, you can. But it should not be a vehicle to where you should be so hyped and thirsty to go ahead and touch your money, especially if you're dealing with the traditional whole life policy to where you're paying on an annual or monthly basis, okay? Now, when you're dealing with the index universal life policy, which most people, they're very biased on these, even in the whole life community, they're like, oh, don't get a, IUL, get a traditional whole life. I mean, I don't care. As long as you understand what you're getting yourself into. That's the only thing that matters. Now, when you're dealing with the whole life policy, what index universal life policy, what you're looking at is, okay, I'm putting money into this policy. I got to pay for life insurance. I want a certain portion of my policy to grow over time, okay, because the policy will grow over time. And I want to be in a situation to where every dime that I put towards this policy can also get passed on to my heirs as well. So on top of that, if I'm putting money towards the policy, I'm still in a situation where I'm gaining interest. Sometimes the interest could be 6%, 7%, 9%, depending upon whatever indice you're dealing with. Sometimes it could be about 15%, right? So that means that if I had $100,000 in that policy, just by me putting that $100,000 in that policy, I'm in a situation where I just gained $15,000 if it's 15%, or $10,000 in my cash value, just by having my money sit there. Now, what if I took my money out of that policy? Let's say I took that $100,000, right, as a down payment on a home or an investment property or something like that. I took that same $100,000, and you should be doing this to, to fund an investment. You shouldn't be investing into a index universal life policy or a whole life policy, and you're doing a policy loan unless you're looking to pull out for an investment, right, or retirement or something like that. But I'm taking this money out and I'm investing into an income producing activity, and I'm paying that policy back over time, okay? That's the strategy. That is the strategy. If anybody tells you to utilize it to do anything other than that, or offset certain debt that you have, it's just not going to work. Like, I'm not about to take money out of this policy just to pay my car note. No, I'm not doing that. It just doesn't make sense unless it's actually strategized. Now, as you continue to go on, you want to be in a situation to where you are continuously understanding your policy, understanding what is the max that I can put towards this policy before it gets towards the tax implications. And then number 4, you want to understand that corporations and banks utilize these same policies, right? There's so many different people that qualify for a premium finance policy to where you don't even have to fund your own policy. You could leverage the bank's money to fund your policy and to leave your family with multiple millions of dollars. multiple millions of dollars. Banks will allow you to do that, and you will be in a situation to where all you do is just pay the interest on the loan. Right now I'm partnering with a few people that walks me through the whole entire process, that walks me through a banker, getting you the right banker and things like that, to make sure that you understand how this process works and you're doing it in a safe way. So let's say, for example, you have a death benefit of $4 million, okay? The life insurance company might pay $35,000 a year for that policy for about 20 years, okay? What is that, like $1 million policy? $1 million that they're putting towards the policy. They might require you to pay just the interest on that loan. The interest on that loan may be $6,000 a year, okay? So you pay that $6,000 a year on the interest on that loan. Now, if anything was to happen, of course, your family's going to get that 4 point some million, starting off, and the insurance company is going to get whatever their investment was previously. They're going to receive that money if you would have passed away in that time. But if you were to live throughout that time, now you created some sort of income, because now you have the ability to have that policy liquidate after a certain period of time. So what happens is that as that cash value is growing over time, that insurance policy is growing over time, you're going to be in a situation to where that money, that cash value is growing, and it has a consistent interest rate that is growing at, okay? It has a consistent interest rate that is growing at, and that insurance company, they're going to receive their investment back times 2 when that policy is liquidated. This is why you're still alive, okay? This is why you're still alive. That policy is going to be liquidated. They're going to receive their investment back. On top of that, you still have a massive death benefit, and you still have a massive cash value. So the win-win situation is for both of you all. Usually it's for clients that, you know, is making $150,000 a year, sometimes a little bit more. You got good assets you saved over time. You have that leverage, right? NFL players, football players, athletes, rappers, they would want to take on that policy. If anything was to happen, their family is getting massive amounts of benefits, okay? Banks utilize it for themselves to store cash, to be in a situation to where if anything was to happen, if anything was happening to their bank, they're storing money in insurance policies, and they can borrow those funds from the insurance policies, and they're still gaining interest on your money. So all the money that you're giving them, let's say collectively a community is giving them $1 million, they're storing the insurance policy, borrowing it right back, and still gaining interest, as if, you know, the money was still there. So it's so many different other leverages. Corporations utilize insurance at a whole nother level. Like, they would literally put insurance policies on their employees, and be in a situation to where they're taking the money that you're earning on a consistent basis, and they're putting it towards these policies. If anything was to happen, I mean, of course, they're going to get a percentage of that death benefit, but they've also leveraged that cash value over time as well. If anything was to happen, if they can't pay you, they're going to borrow from that cash value, and they're the owners of those policies. It's so many different ways to utilize these different policies, y'all. It's so incredible. Banks buy this stuff, corporations buy this stuff, people should be buying this. So it's like, if you're not understanding how to leverage an insurance company to build wealth within your family, it's impossible that you're building wealth. Like, I don't see how you're building wealth. Like, I just don't see consistent wealth. And I'm talking, when I say wealth, I mean, it just doesn't start with my generation. I mean, like 2, 3, 4, 5 generations down the line, how can we generate that? And when I say generate that, I mean, I'm not having to pay taxes on this either, okay? I'm not having to pay taxes on this. Just because you made a couple $1 million, that's fine. That's hard work money. But how can you be in a situation to where your family is a money-making machine? You're living off the interest of your money. You're living off the interest of your policies. And that's the focus that you should be having as a family. Now, if you want to be selfish and do it for yourself, go ahead and do it for yourself. But you should be thinking about that for your whole entire family. And insurance has changed my whole entire perspective about finances, period, and how it could save so many different people, especially when it comes down to the FDIC. You know, being able to insure people's funds up to $250,000. Like, so many people have more than $250,000 in a bank account. There are banks right now, today, in March of 2023, that have bailed out. Like, they don't have any money anymore. And the most that people could get is $250,000 when Silicon Valley is like one of the tech homes, and 89% of the people that had funds in those policies were over freaking 250,000, like I would be sick right now. But here's what happened. We put too much trust into vehicles and not understand that when these corporations say black and white, they mean black and white. They don't play that stuff. They mean what they say. And in order for us to elevate ourselves, it don't matter where you are, what country or whatever, you can utilize insurance. But in order for you to elevate yourself, you got to know the rules to the game. You got to know the rules to the game. People that understand the rules to the game, they happen to live a very well stress-free life. Very well stress-free life. People that knew the FDIC rules, people that were keeping up with the financials of their banks, they didn't have problems. Okay, they didn't have those problems. But the people who did, they're suffering. They're suffering really, really bad. These businesses like Roku, they're suffering really bad because they put so much trust into a vehicle to where they could have leveraged like others did to survive. So there's so many different stories you guys need to look up on how people use insurance to fund their businesses, whether it's term, whole, whatever. JCPenney's utilize insurance. Walmart utilize insurance to stay whole. Walt Disney utilized insurance to make sure he funds his Walt Disney Ventures. So I want you guys to be able to be educated on this stuff, and I hope that this video helped you all at a whole nother level, to understand how this business works and understand how insurance works. And I haven't even gotten into the property and the casualty and the home side. Like, that's a whole nother level. But I just wanted to specifically talk about the life side, because most people, they don't leverage that. They don't leverage this life side like corporations and banks do. Okay, so I want you guys to go out here and win. If you listen to this and you don't have a policy, get yourself a policy. Contact me, figure out how you can get in contact with my team, and get yourself a policy as soon as possible. I got people that are paying $10 a month, $20 a month. Okay, get yourself a policy, get yourself something, so you can make sure you can leverage who you are and leverage your time here on this earth. So let's go ahead, let's get to it, let's win. All right.